So
Yeah. So
stand
that
by
was
1 second.
okay.
And I think we are live on YouTube. Welcome to our YouTube audience that's joining us. We're in the second hour of group coaching here. I have a special treat for each and every one of you. If you're on YouTube sphere, you may not even know my dear friend Alfonso. He's well loved and known among the formal Trade Smart community and our group coaching class that was in here for the last hour. But for some of you, you may be new. So let me do a quick introduction, and then we're going to pick right up where we left off with Alfonso talking to us about his June trading. So Fonzie and I think we go back the longest of anybody here at TradeSmart. I met him way back in about 2010, I think. And one of the things that most attracted me to Alfonso was his ability to create what I call lifestyle trading strategies. The man has bent the stock market around his will for how he wants to live his life. And he's able to do things in the market that many people take 19 monitors and crazy high-speed internet and just sitting all day in front of the computer. And he's executing strategies with similar results from a flipping iPhone when he's getting apparently an IV treatment so he can be Superman. We just learned about that a little bit ago. And I love it. And that's sort of a utopia that so many people are striving for. They want to trade the stock market so it can increase the quality of their life, not so it can take over their life. And so Alfonso is joining us today. We've got a course that's going to be coming out next week. It's free to join. Watch email, watch YouTube for more information on that. We're going to be talking a little bit more about his strategy, but Fonzie's jumping in here right now just to talk a little bit about what he's doing, what he's discovered, and how it can benefit you. So Alfonso, I'm sorry to interrupt your train of thought with the first hour group coaching, but man, let's just come right back to you and pick up where you left off.
Yeah. So cool. Thanks, Josh. So so that one anyway, that was the dash trade. And I'll come back to a few others, but since there are a little bit more people here, people are always, so for me, like I said, I want to trade as little as I have to, and I don't want to be in front of my screen all day. Although I do feel that there's like major advantages to intraday trading, just because there's lots of intraday volatility, and so it's just a nice easy way to create nice income. The challenge though that I've found in talking to a lot of people is that there's just not that a lot of people just either feel like they can't intraday trade for whatever reason. I just kind of wrote down some here, so I'm just going to read them. But some people don't want to intraday trade because either they have not done it successfully in the past, right? They've failed at it, or they see it as some type of perceived risk, like, wow, it's really risky. Of course, holding things overnight or holding things for a week is, to me, just as risky. So there's really there was always risk inherent in trading for sure. Or that they don't have time, or they don't want to be at their computer like me. Or they're not too super tech savvy. Like they believe they got to be on 1 minute charts or 2 minute charts, and they need to use hotkeys. And, they may be a little bit older or just not completely tech savvy. And so they feel like they're just at a disadvantage. They can't enter those positions quickly or exit quickly. And I'm sure there's like many other reasons or obstacles that someone might have. But I believe that, in fact, if you're looking to create income, and that could be any amount of income, it doesn't really matter how much. For some people, I used to have a live trading room for 5 years. I would never do it again, but I had a successful one for 5 years. And for some people, it was like moms that would come in and be like, man, if I could just make $2,000 a month, like my family's life would change. For others, they wanted to make 10, 20, whatever the number is, it doesn't really matter. But if you're looking to just make some consistent income, but you don't want to spend all of the necessary time doing it, I have taken my strategy that I've done for years and years and years, like it's literally has not changed. And I'm able to now implement it just literally from my mobile phone. Like I only spent 2 days at my desk in June. And I went through the numbers earlier. Should I just go through those again? I don't know if.
Yeah, why don't you go ahead and repeat that for those just joining on YouTube?
Yeah. So I took some time off because so for 2 years, we're in 2022. So 2020 and 2021, I did a lot of mentorships for TradeSmart. So it was like every quarter. And then I was just getting a little burnt out. My son was starting to become like a junior, senior. I wanted to spend more time with him. And my daughter was in middle school. So I was like, Josh, I got to take some time off. I don't want to do any more mentorships for a little bit. And I told him that I would come back in the fall of this year. Of course, he twisted my arm a little bit because he lives close to me. And so I agreed to come and do another one coming up here in July. But so I took just a couple of months off from trading. And then I came back and I was like, all right, what I want to do now is I want to continue to trade the way I'm trading, but not be in front of my computer all day. In fact, I don't even want to be in my computer for 3 hours. I don't want to sit in front of my computer for even 3 hours a day. I just don't want to do that anymore. So I said, well, I have this beautiful strategy that has an edge, and I'll talk about how you can define an edge and stuff in a little bit. But I said, what I'm going to do is I'm going to drain my account down to 26,000 each month. And then I'm just going to, so if you want to be a pattern day trader, you have to have at least 25,000 in your retail account so that you can get 4 to 1 intraday margin and then not be subject to 3 round trips every 5 days, I think is what it is. So I drained it down to like almost the bare minimum. And I said, I'm just going to do that for a couple of months and just take out the profits and just keep going at 26 because I like to keep more in there, right? Obviously. But I said, I'm sure I can duplicate the results, even if I just had the bare minimum. And that might be really good for folks that can muster up 27,000, but can't muster up 50 or 60, which would provide them, 200, 250,000 intraday buying power. So just in June, there's usually 21 days, trading days in a month on average. Some days have a little bit more and some days have a little bit less. So I'm assuming that there were probably about 21 trading days in June. So in the month of June, I only spent 2 trading days at my desktop where I am right now. All of the rest of the time, I implemented my trades from my mobile phone. Sometimes it was pulling over to a park or like this morning when I was getting a B vitamin treatment at Restore in Brentwood. Other times it's just, sitting at the kitchen table doing something else or pulling my novel aside and pulling up my phone at, 5 minutes before every half an hour. But anyway, it was an average month. I made $8,095.55. Of the long trades of that profit, 5,941 was from long trades. 2,154 was from short trades. My overall average of wins to losses was 63%. Of the long trades, it was a little lower than that. It was 58%. The short trades, it was almost 80%. It was 78%. My largest winning trade was 1,831. My largest losing was 580. My average time in trades, which is fairly consistent based on the fact that I trade just from the 30-minute time frame, was 3 hours and 48 minutes. And I traded 19 days, 16 winning days, 3 losing days. That was my June. And I just went over one of the trades and now we're in July, obviously. So I just went over one of the trades from today and one from yesterday. But what I wanted to do before I cover any more trades is that and there's a lot of people in here that I recognize. Some of them even been through my program. I'm just pulling up my other screen here. Or I'm looking at my other screen. So I do have 3 screens, but it's mostly just because I need them for when I teach. I used to have 6 screens, believe it or not, when I was obsessed with day trading and sat at my desk for 6 hours a day. But then I dropped it to 3, and now I'm almost down literally just to this little iPhone. I don't even know what I have. I usually get the 1 year lower because my wife, when she upgrades, she always gives our kids the nicer phone, and then I get like the rub one or whatever,
It cracks me up. I was at Alfonso's house, I don't know, a couple of years ago, and like his phone was like ancient, and he's like, "Yeah, just whatever the kids are done with, it makes its way to me." Screen was all smashed.
And I always track them too. Like I'm the worst. Like
yeah,
I'm just so bad. I'm like, my wife doesn't keep a case on hers. And I'm like, how is it that your phone is not just demolished? Mine has a case on it and it's demolished. I don't get it. But any of that. So for me, right. So when I teach students and how I've completely organized my entire way of thinking about trading is that successful trading, and by successful trading, I mean defined as consistently making money with little drawdown. And now that could be different from what some people think, but consistent trading with little drawdown, meaning not having big up days and then having massive down days and then hoping to get a big big update, but just kind of like that nice rising little equity curve. And so over the years, I've learned that successful trading is a math problem. And I needed to really understand that in addition to math, I really had to understand that trading is a function of understanding probability, and not just micro probability, but macro probability as well. So what I mean by that is every time you take a trade, it's random. You really have no idea whether or not the trade will work. And there might be some people out there that are saying, no, I absolutely know when a trade will work. And my answer to that would be, if that was true, you probably wouldn't be here at whatever time it is in your time zone listening to me on a free YouTube channel. You would be, you would have taken the trade that you knew you were absolutely going to win, and you would have taken every single last dollar that you could have rounded up from family and friends and borrowed, and you would have put it on that trade. So every single individual trade is completely random. I have no idea if it's going to work or not. Even if I believe that I think it is, I've trained my brain to know that it's just a trade and it's likely going to maybe work and maybe it won't work. However, I do know that if you have a strategy that produces an edge, that in other words, over 20 trades, you make more money than you lose. And of course, there's some parameters to that. I can't get into all of them, but there's a sample I usually put people through during my teachings. But if you have a strategy that has an edge and you implement it consistently over those 20 trades, and you risk the same amount per trades, and you trade your strategy exactly like you're supposed to on each trade, it's literally impossible to not be profitable every 20 trades. And that's the macro part of it. So trading becomes predictable over a sample size of trades, completely unpredictable over each individual trade. Does that make sense? Just type in a, I don't know, yes or one, if that kind of makes sense. So how I use that is, for me, now there is totally value to having trading and market knowledge. There totally is. What I'm suggesting though is that understanding math and micro and macro probability are more important than your trading or market knowledge. And to me, it's by far. Now, that doesn't mean that you shouldn't learn about the market or about indicators and trade and all of that stuff. That's very, very important. However, you can be super successful at trading by taking your learning, what you've learned in the market and all of those things, and then making it into your very specific, unique strategy. And so the other thing that I learned about trading is I used to read all of those market wizard books. There's like 3 or 4 of them. But I remember reading them and I was always fascinated. So I'm going to be 54 in a couple months. So, I was reading these sometimes when I was like the first one, I think I was in like my 30s or something. But every time I read those books, what I was always fascinated about was that most of those traders that were profiled in those books were all wildly successful, but the majority of them had like almost little to no financial background. Like they weren't like the head of trading at Goldman Sachs. They weren't, CFAs or anything like that. They were just people that like had identified a strategy that has an edge, and they just repeated it over and over and over again. And so I was like, wow, that's kind of interesting, because I had always thought that I would need to like get some type of degree and, like go get my CFA, chartered financial analyst, in order to understand all of this stuff. But what I found is that all of those traders, most of them were like completely unknown, and they just traded one thing. They found something that had an edge, and they just kept repeating it over and over again. And sometimes the edge happened for some people daily, and other times it happened once every 3 months. It just depended on on each individual trader. And so for me, I adopted that. I said, I just want, and I've been trading the same way for as long as I can remember. One single strategy to just repeat over and over and over again, and all it's so that I'm spending less and less time. So I used to trade the same way, but I would be on 1 minute charts intraday. Then I was like, no, maybe I can spend less time if I do 5 minutes. And now I'm at 30 minutes, and I've been at that for now like almost 3 to 4 years now. That's the only time frame in which I enter a trade, is the 30-minute time frame, which allows me to usually take one trade a day. Sometimes I don't trade during the day. Like you can see, I didn't trade even 3 days last month, and spend. And because I'm on a 30-minute time frame, the strategy has the edge, but I don't have to be staring at my computer all day. I can literally just do it from my cell phone. So.
So walk me through what that process is like. You've got some time in the evening or whatever, where you're kind of analyzing some stocks that are interesting to you, and then you've got a watch list in the app, and then you're able to just pull that up from your phone. Like you kind of have a game plan going into the day. You're not doing all of your study on the phone, right?
No. So I usually have like, so you can see my screen. So I do keep up some, and right now it's not things that, well, there are a few things that have gapped and what have you, but mostly it's just things that I've recognized that are in play, that have really good, really good chart patterns that would suggest something that's already moved in a direction, like the dash trade that I talked about, where it had that big day a couple of days ago on the 5th. So it provided an opportunity to capture the move as new buyers would enter in the next couple of days. So I do have a couple of things that I carry over. And then beyond that, what I'll do, if there's like, when I do look at like at 8, so the market opens at 8:30 my time, usually at 8:50, I'll log into the app and I'll just see what, I'll quickly go through some of the stocks on my list that I've carried over. But then if I can't find anything that really is setting up in that first half an hour, then I will just go to, in TradeStation, and I can even do it on my app. It'll just, I'll either pull up the most active trades for today, or the ones that have like the most dollar gain or the most dollar loss. And usually just pick ones that have already had good volume, that are near the top of the list, because, and then I'll just click on a couple of those until I find that really good first candle that I love to see. And then I'll just quickly look at the bigger timeframes to make sure that all of the other things in my strategy match. And then every half an hour, I'll just wait and log back in and see if there's a 30-minute time frame that's matching my entry setup. So that's kind of what I do. Now, I've been doing this for a while, so I probably it would probably be more advantageous to spend a little bit of time at night to create a watch list. And I do that when I do my mentorship, so I can help guide students in creating a watch list. But when I'm not teaching, I don't typically do that. I just take things that I've had followed over from the day before. And then earnings season, Josh, really makes it simple, because I can recognize stocks that I've traded over and over and over again every quarter that usually gap, that have lots of interest, lots of volume, and those I can easily assess. And I know they're going to be in play for, anywhere from 1 to 3 weeks after they announce earnings.
Yeah, it makes sense. It reminds me of when I was learning to fly, like the first time you got in the airplane, or even before that. I remember like reviewing all my notes and all the numbers that you need to remember when you're flying an airplane. But then you kind of get to a point where you just remember it. You've got your checklists, right? And that's super important to a pilot. And you follow the system the same way every time, so you don't fly into the side of a mountain, but things become familiar and you remember it. And that's just, it's hard to explain, until people have experienced that in the market, where you do keep seeing the same tickers and everything. And it's not a ocean of 7,000 stocks and ETFs, but you kind of have probably 100 or so that you're familiar with.
Yeah. Right. Absolutely, for sure. And yeah, so that was that. What was the other part of the question? Was there another part?
No, I think you covered it. Just, and I don't want to ask you to give away your methodology here because that's proprietary to you, but just the model of, it's preparation and then execution. And so for you, the preparation's been over 3 decades of trading. And so some of it can be a little bit more, from the cell phone. For those that maybe are learning the system for the first time, it would be appropriate to develop a watch list of things to kind of concentrate your attention so that if you're at work or getting a Superman treatment at the IV place, you can just pull up your phone and be able to execute.
Yeah. Yeah, cool. So I already showed the dash, right? So I can just show, I can obviously get into all of the different parameters that I have in order to find a trade, but I can just show you a couple. So this is actually one, absolutely, specifically what I would look for every single day on a trade. And it's Tesla, which is an expensive stock. So, and Tesla is sometimes, like when I used to try to trade Tesla on a smaller time frames, it was a challenge because, even well, right now the bid and the ask is not very big because it's later in the morning and stuff. But in that first little bit, it's, you get totally whipped around and lose $500 like the snap of the fingers. But so this is how I keep if I'm at my desk, this is how I keep my screen up. When I'm on the mobile app, I have the 30, and then I always have to go to the daily just to confirm and what have you. But here was, Tesla, which is kind of coming out of this little bit of a rounded bottom. Also on the monthly chart, it's at this, so, it was up all the way up here at 1200. And then it did this failed buy set up on the monthly, pull back in. But we're kind of at this area in here where there was, tried to go lower on this particular month here. I can point to it. Actually, yeah, hold on. I can do it. I think, let me see. No, wait. And let me just, oh, I know what I need. Man, I haven't taught in so much. I need my Camtasia. That's what I need. Hold on. Let me get that up. There we go.
While you're doing that, I'm curious.
I got it. Yeah.
Go ahead. I don't want to interrupt. Go ahead.
All right. So, yeah. Okay, good. So, obviously there was tried to go lower here, and then you can see it just got bought over these 4 months. Then it came in, tried to go a little higher, and starts to pull back in. And it's right back at this little area in here, which is probably the reason why it's forming this little bit of a rounded bottom, W type pattern or whatever you'd want to refer to in here. And so then 2 days ago, it had the nice bullish candle. So it came in, formed an equal low, and then ran down, formed a low and closed, a higher low and closed near, basically at the high of the day. And then yesterday it did this little pause day. And then new buyers jumping in today. So you can see the green line is like, it should easily trade to the open of this day right here, which was 628. And so this morning, this thing ran up. Here's the first 30-minute candle. Then it just started pausing. And I have a very specific way in which I need to enter. It has to be over some type of failed pattern, which for me is just a red candle. So you can see it just paused right here at 11:30. So every half an hour, this candle paused. And so the entry is just over the red with a stop. You can either do it under the red candle or just under the entry candle. If you're at your desk, you could do it, under the entry candle. If you're more on your mobile phone, just use the more, just make it so that you can set the trade up in advance and not have to worry about it. And so, the entry is, the entry 724.56 by 720. About 720.50. Yeah. So about $4. And that thing just triggers in, and you can see it ran $10 on a $4 stop in an hour and a half. Just so simple. This strategy has, this entry right here has such an edge. Now, if this trade works, no idea. But if you take 20 of this setup with a daily chart that looks like that, a few other things obviously that you need to know, and you just completely do those things over and over and over again, 20 trades, you'll always make money. The only way you wouldn't make money is if you messed it up. That's literally the way it would break down. So there's an example of that Tesla. Then I already went over that Dash one. There was another Chewy, which the other thing that I always love to look at when I'm trying to find stocks that I would put on my list to potentially trade intraday is the location of the trade or the location of where it's gapping to if it's earnings season. So this Chewy, I don't even know what it is. I think it's the dog thing, right? Where you get I think we even get it. I think my wife has it where you get dog treats or something in the mail. I think that's what Chewy is. It could be something different. I don't know. I don't even know what this company does, but on the monthly chart,
I'm curious what they do. I'm going to look it up.
You can see on the monthly chart, it hasn't been around that long. I mean, the stock came into existence in 2019, and then it did this big run up, and then it just basically came down to right where it opened back up, right near its low here. So you can see the last time price was here in 2019, it went all the way up to 120. Now, the beautiful thing is that it doesn't need to go to 120 to make money. You can pick this thing off on shorter trades off the daily chart or using intraday in which to do it. So Chewy became nice to me because on the daily chart, I started to see that it started to not go any lower in here, which meaning that their sellers were drying up. There were more buyers interested than there were sellers. Every time it tried to go lower, it got bought, tried to go lower. And then they had this little gap up here. And then over the next, I have to plug in my my iPad or else I'm going to run out. So jump in for a second, Josh, while I plug this thing in.
Yeah, so I just Googled it. Chewy is the largest e-commerce pet care retailer in the U.S. Boom, put it
That's what I thought, yeah. We get it every month at damn dog treats and stuff like that.
I don't know. Like, we get dog food in the mail too, and I'm thinking the amount that these guys have to pay in shipping I don't know how they make money. It proves you can make money doing anything if you've got the right strategy. Like mailing me dog food every month, 50-pound bags.
Well, the thing is, those subscription businesses, they don't really need a lot of.
Yeah, that's true.
Just don't really need a lot of customers in order to. It's like those food shipping companies. But in any event, all right, I'm back. I got my thing plugged in here. So, let me just move this over to here so I can. There we go.
I'm sure with our viral reach, Chewy stock probably just jumped 20%.
Possibly, yeah. Okay, so and so in here where this little, I think it's called an eclipse, so this little oval egg-looking little thing right here, it kind of confirmed that there was nobody left to sell. It had the gap up, and then it just was choppy for, I don't know, a couple of weeks. There was nobody left to sell. And then it basically gapped right here on 621. And so when that happened, I was like, there's an opportunity, at least it should trade, and these are the lines. Now, I didn't just draw these lines. I had these lines drawn. One of the things I've become really good at is identifying where a stock would likely trade to based on prior price action. So I was like, about $40 would be a pretty good little area where this thing could go. And so you can see it had quite a bit of a room. So in my earnings explosion strategy, which is what I utilize for my non-day trades, swing trades, some people call them, we had a beautiful entry right there above the close of that gap day on 621. And you can see it ran right up, and then it pulled this nice little lower volume pullback right there. And then it gave another beautiful buy setup right there. Now, what I love about these is that when they trigger on the daily chart, I will then also look to play them intraday on my 30-minute time frame. And I'll show you a couple of examples of that. And then it ran back up to that 40, and then it paused again yesterday. And then the next area, as I said, this thing should probably trade, even today up to 42, at least into that 42.50 area, which is where it's rapidly approaching to. Then it might pause. It could continue to just rip higher, but it will probably likely pause for a little bit. It's got a lot of congestion over here to the left. But this is just one where it provided nice non-day trades, but also then lots of day trades. So you can see another just absolutely just beautiful setup that matches my strategy that I trade over and over and over again is right here, where it ran up, first half an hour of the day. Where's my little pointer right there? First half an hour of the day, and the second half an hour of the day. And then it's run pretty far, so it needs to pause a little bit. Right? I mean, I always equate it to somebody just ran up, a really long hill. They're probably at the top. They're a little winded. Still has a void and a way to go, but it needs to pause, right? I mean, not everybody is, bionic and can run without pausing. So it needs to like rest a little bit, which it did. It rested for an hour. You can see it tried to go lower. It couldn't. And then it leaves this right here. So this is an entry that I'll take every single time if it's a stock that I'm watching without hesitation. I don't know if it's going to work, but I know that if I take 20 of them, I'll make money. 8, 15, 20,000 a month, whatever it is. And the entry's there. The stop is here. I'll make it red. And then it opened up. It tried to go down a little bit, and then it comes triggers in through the price, and then it's just off to the races. Right? Then it gave another entry right here. If you missed the first one, that little pause there near the high of the previous high of the day, and now that day on the daily chart was this day 7.5, which was this day right here. Okay. And you can see today it's trading right up to that that big target up there, that 42, about 42.50. So this move from here, 30 to 42.50, happened in a couple of weeks, just by utilizing multiple time frame analysis, the location, prior price action, and then having a specific, very unique way in which you get into a trade that, if you enter it over and over again, it will produce results over a series of trades.
So would you avoid a trade on this now since you're so close to your daily price target?
Yeah.
Like even if you had a reset, it's nullified, right?
Yeah. Right now in this moment in time. Yeah.
Yeah, that makes sense. So talk to me a little bit about, I saw earlier when you were looking up, might have been in the regular group coaching call. Do you take a screenshot of every single trade that you take and for your own records, or, you're breaking up on me a little bit. I cannot hear you, Fonzie. I will say.
Oh, there you go. Can you hear me now?
Now I got you back loud and clear.
I don't know what side it was on, but yeah. No, but the answer to your question would be, so like right now, so that's the other, again, this is just kind of like just this, YouTube live thing that we're doing. But next week I'll be going into more of this. Josh can probably talk to you about that, but it will be where I'll get into a little bit more of the specifics of it. But I'm always looking, so my entry on the 30-minute time frame or on the daily chart, if I'm doing a non-day trade, is what I refer to as like a moment in time. It's a moment in time entry. So it's very precise, has precision. It's always accompanied by a failed pattern where either a failed pattern is just typically a failed expectation. So it's where traders are, selling or shorting or buying at an area where there's likely going to just be some absorption between supply and demand. So it causes people to be somewhat in the wrong side of the trade in a very short term. And then the primary direction of the trade continues over the next day or two as new buyers are brought back into the market. And then the big institutions that created a move want to add more shares in. And so Chewy's just a great example of that. But now we're at an area on the chart where there's really there was a moment in time this morning, right, over this candle here. But now there's not really a moment in time entry. So I would never take this trade here right now.
Yeah, makes sense.
Yeah.
Really makes sense. I was asking you when we had the audio drop. So do you take a screenshot of every trade, or to the best of your ability? I saw your file there, or is that just?
I mean, I haven't this year just because I have to be at my computer to do it, and I've been doing it so long. But
Yeah.
as I start teaching again, I will. But yeah, I have. I use Snagit, and you can see I have, you know,
Huh.
yeah. I mean, just so many that I just and that that allows me, because sometimes, especially when I'm like in the teaching mode of it, is that I will just if I ever need to be reminded, I will just go through all of the trades that I've taken in the past, and I'm like, the strategy has an edge, and I don't know which. So, and this is something that I just believe in, right? And I'm not saying that it's right or wrong. You have to measure truth with your own measure of truth. Just because I say something doesn't mean that it's true or not. I'm just saying it's truthful for me, but you have to measure your own. You have to measure truth with your truth, not with my truth. But for me, because I know that every 20 trades is profitable, and I don't know which of the 20 are going to be winners, although I do typically know that there's going to be about 13 to 16 that'll be winners, and then 3 to 6 will be losers. I don't know which ones are those going to be. So if I do have 3 or 4 losing trades in a row, that does not change anything. I continue to risk the same amount for if I lost 4 in a row, I continue to risk the same amount for the fifth trade or the 6th trade or 7th trade. And the reason is because successful trading is a math problem. And that's where the math comes in. Where if I lose 500, 500, 500, 500, so I'm down $2,000 on day trades, and I say, well, I'm going to reduce my risk to 200, and then my next 5 are winners, right? Because there's a random distribution of winners and losers over a 20 trade sample. If I've reduced my risk to 200, and now I have 5 winners in a row, that might just get me back to picking up my 2,000 or just a little bit more. But if I keep my same risk, and I know that over a series of 20 trades, that many certain percentage are going to be winners and losers, then that the math then keeps you in the game in order to be profitable over 20 trades, even if you've lost 3 or 4 in a row. Does that make sense? Type in a 1. Now some people, and now it's not wrong if you do it differently than that. But I'm just saying that from a math perspective, once you start changing how much you risk per trade, be either based on fear or based on your belief in how the trade's going to work, you've now taken away the power of math and probability. And now you're just assuming your own belief systems, either of, I don't want to lose anymore, or I know that this trade is, going to work. So I'm going to start off the month by risking 2,000 on the trade because I know this trade is going to work. And then it doesn't. And so you're now down 2,000 to start off the month when you should only be down 500. And then likely you start imposing your fear on how much you're going to risk for future trades. Or if you just keep your risk amount per trade the same, then you have the power of math and that power of micro or macro probability on your side.
For those that have heard me teach the R's system of trading and risk management and all that, I want to connect some dots here, especially for those on YouTube that may not be as familiar with us. Alfonso is the guy that taught me all of that, probably back in, when was that, Fonzie? 2013, 2014.
Yeah, probably around there.
And it's definitely top 5 and maybe top 3 things that changed my trading life and went from inconsistent gains to consistently knocking out, we say in football terms, 3 yards in a cloud of dust, 3 yards in a cloud of dust, and not shooting for grand slams anymore. Not that we're opposed to grand slams when they occur, but just consistently grinding out profit. So I wanted to give honor where honor's due there. And I try to credit Alfonso every time I teach it, but this is the guy. If you've heard me talk about that before, Fonzie is a total expert, in my opinion, in risk management. And we're going to be asking him, he's going to do a mentorship that's including some of the risky business training, but in more of a practicum style. So you guys will be applying it. It's going to be really great. We're kind of designing what that's going to look like right now.
Yeah. Well, so on that one, I just want to make people understand that I did not create I did not create risk management, right? I'm just,
Right.
but I learned about risk management, and then I looked at it from a math and probability standpoint, and I was like, that's truth. There is, if I can't choose which ones I think are going to work and which ones I don't think are going to work. Because if I do, then I'm not understanding that each trade is random, but a series of like trades are predictable. And then, and then I started looking at it from a standpoint of like, if I was in middle school and I was trying to explain, and I talk about a lot of this in my mentorship, is I literally, like, when I think of something, I always say, well, if I was talking, and this was like 4 years ago, and like, if I was talking to my son who was 12 years old, and I said, son, today I'm going to risk on this trade $2,000, and then tomorrow I'm going to risk 200, and then the next day I'm going to risk 500, and the next day I'm going to risk 4,000, and the next day I'm going to risk 300. What would he say? And he'd probably be like, it looks like I'm going to community college, Dad. Just not really looking good for me. I mean, I'm only in middle school math, and I don't think that scenario is going to really work out for you, really well. So I look at it from a standpoint of it's a math problem. Like so with that, what you have to do to be a successful trader is you have to remove this belief that you're right or wrong on a trade, and then attach some emotion to it. So now it's not easy, because we're human beings, and we get fired up when we have a winning trade, and we get bummed out when we have a losing trade, but it can't become your identity. If you are so elated and so feel like Hercules or the Incredible Hulk when you have a winning trade, and your identity is built around that, and you're excited about it, and you feel significant, and this maybe fix some wound that you had when you were a child, when somebody told you were wrong all the time, and all of a sudden you've proven on this one trade that you're right, you will bring that into your trading, and it'll mess it all up. Now, conversely, if you have a losing trade, you don't want to fall into, well, why does that always happen to me? How come I always have losing trades? How come that won't work out? Maybe I need to learn more. No, it's just, some trades work and some trades don't. And you don't need to attach your identity to it, because if you do, then it'll be just a recipe of disaster. Now, the only way that you could attach your emotions to it and be totally elated when something wins, and totally beat yourself up when something loses, if you at least stay stringent and consistent with your strategy and your risk. Otherwise, it'll just be a complete recipe of disaster. And all of you know this, right? I mean, intellectually, we know this, but it's hard to, in the moment, or when you're building out your trading career, to actually live that and not make your trading about you. So for the easiest way that I got around that, because early on I was always totally emotional all the time. Anytime I had winners, I would be like, I'm so smart, look how great I am. I have no education, I'm not a CFP, or I didn't work for Goldman Sachs, but look at me, I had 10 winners in a row. Or, oh my gosh, I'm such a loser. The way I got over that was training myself to not have my identity tied to trading. Now, it was not an easy process, right? I mean, to say I'm not going to be in front of my computer, or I'm not going to sit in my computer for 6 hours a day, or I'm going to change up something because I feel like in this moment this is what's going to happen, is just winner losers is what completely ultimately changed trading forever, and it made it become effortless. And it's not an easy process to do, but it's one that has to be done in order to get to the next level, for sure.
So good, y'all. I mean, these are golden nuggets and writer downers, as I like to call them. It's interesting that you bring that up, Alfonso, because especially you and me in the position that we're in mentoring and teaching and helping others, it seems like there's additional judgment to every single trade that's taken. It doesn't seem like it there is. People look at the TSU trading account and they're like, well, why did you do that? And so that's something that I still very actively battle, like not feeling bad if there's a losing trade, because of the, the judgment that comes after that. Even though the TSU account, we're on the verge of tripling right now, and the metrics are amazing across the board, and y'all are welcome to look at that anytime you want. But I'm taking notes here too, remembering, my identity is not in trading. For me, my identity is the dad that I am and the people around me that I can serve, which includes you guys that are here at TradeSmart. Yeah. And if we're helping good people make more money, who subsequently are able to do more good things, then that's legacy, that's identity. And who cares about the stupid trade? That's just the vehicle to get there. And we want to do well, obviously, but it's not our identity. So good.
Exactly. So the identity really needs to shift to, am I doing what I'm supposed to do?
Yep.
When I'm supposed to do it, whether I want to or not. And that really, if you shift it to that, and quite honestly, if you just do that in everything in life, which is why I always think my mentorship is not just about trading, but it's really about life. I'm 53 years old, and I pride myself on being so diligent in all of the things that I do, even if I don't want to do it. Like I still do CrossFit at 53 and almost 54 years old religiously. And sometimes I don't want to do it, but I'm like, I want to be able to fall down and get up when I'm 70 years old. And the truth of the matter is that 99% of 70-year-olds, if they fall down, they can't get up. Right. And that's not a function. It's just a function of that they didn't just do the small disciplines along the way in order to be able to fall down and get up when they're 70. And so once you apply small disciplines in one area of your life, they start to spill over in other areas of your life. So I always view, Josh, trading as somewhat like how you live. Right. So if you're just an unorganized, non-disciplined person in life, it's very difficult to believe that you're going to come to the world of trading and somehow be the complete opposite of the way you live your daily life. And I think that's probably the main reason why most people struggle with consistency in trading, is because they're trading ultimately like they live their life, which is, and there's no judgment in that. There's no condemnation in any of that, but you just have to be aware of that, or otherwise the market and the charts will completely frustrate you to no end and make you think that you're just not smart enough to do this, when in essence, it's not even really necessarily being super smart to be successful. You just have to do the right things consistently over time and just continue to build that snowball of your mindset. And I'll say this, I know that I have, when I've been at TSU since 2000, 13 maybe, when I started doing some stuff with Josh. And in fact, I moved down here because when I was doing things with Josh, I would just loved Tennessee. And I was like, my gosh, I have to move here. And so I worked on my wife for a couple of years. And finally in 2018, we moved down here. And, I actually have to thank Josh for that, because if I never met Josh, I probably never would have visited Tennessee and be able to spend 5 days, 4 times a year when I was come down to hang with the TSU guys and gals. And I just fell in love with it. So from that standpoint, I'm just super grateful. But so I've been with TSU for, doing things on and off for a long time. And people either completely get enamored with what I do, or they just like, something, just show me some new shiny toy that I can make money with tomorrow. And and you can find that in any education. You can just scroll YouTube videos and, find somebody, in front of a green screen in front of their private jet that said that they, made $4 million on an overnight oil contract or something like that. And maybe some of them did, but the way I want to teach people is how you can do this effortlessly for as long as you're on this planet, and not being so obsessed with it that you're doing it on vacation, you're staring at your computer at 8 o'clock at night or 4 in the afternoon when you should be doing something else, or, and so so some people get turned off in that because they're so disrupted in their mindset regarding trading that they're just looking for the next thing that will make them whole. Like, if I just find one thing, one trade that will make me $40,000, I'll make all of my losings I've ever made back, and then I'll start right and do it correct. And that really ever happens. So I'm always, my focus, and Josh has known this since day one, is to just get people onto that mindset of being consistent. Boring, uneventful, maybe, but there's nothing more. There is nothing more gratifying as a trader when every single month you make money. I mean, because that is the reason, right, Josh, that people get into trading, is to make money.
Yeah. But it's not, some of them say that, but then the real reason is they want to feel good about themselves or significance or whatever. And because, the inverse is you should feel like you did not get into trading to lose money, but it blows my mind how much people are just like, well, that wasn't a big deal. Or I'm like, no, that was a big deal. Like, take it seriously.
Yeah. I used to have, when I used to do one-on-one coaching, I don't do it anymore, but I remember I had this client who had a great job. I think he made like $250 a year, in his job. And then he traded, but he traded completely random. And I finally got him to see the error in his ways. But when he first started, I'd be like, well, how much money did you make last night? He's like, well, I lost $4,000. I'm like, well, that's not good. He's like, yeah, but it's not that big of a deal because I make $25,000 a month. I was like, well, that's terrible thinking. What does that mean? Like, then if that's what it is, then just go burn $4,000 in your backyard. It'll take you 3 minutes rather than suffering for the amount of time that you spent to lose $4,000 this month trading randomly. And he was like, oh yeah, that's a pretty good point. So you're right. Most people's, I think, loftiest goal is that they want to make consistent money. However, underrooted in that, like you were talking about, Josh, and what messes people up, me included, for a long, long time, was attaching significance, ego. I'm right. Look how cool I am. Look how much I know. How much I can tell people at the neighborhood barbecue about charts and indicators and stuff, rather than saying, yeah, I do the same thing over and over again. I make money. It's awesome. It provides for my family. It provides for me to give money away. It provides for me to have free time. It provides a little extra income if I like my day job, whatever it is. And that, I think, has to be the ultimate goal for people if they want to be consistent. So, over the next couple of weeks, you're going to be hearing more and more of me. A lot of you already know of me and have been through some of my trainings and stuff. But what you won't get from me is I've come up with some new way to make money, and I've renamed some indicator like this because I'm really significant and cool. And if you just follow that indicator or do exactly this, you're going to have, you'll make 190,000 next month, right? That's not what I do. I teach people how to be consistent month after month after month and make it a living, whether or not it is your primary living or not. There's nothing more gratifying to have consistent profits every month. And again, that can be whatever that means to you. To some people, $1,000 extra a month is life-changing. For others, it needs to be more than that. So it's a lot just going to depend on the size of your account and what your particular outcomes or goals are. But that
and the problem with indicators and any algo system is they atrophy. What's it called? Entropy, where energy can never be created; it's only lost, or whatever, in a closed system. And I just read this article. You'll know the turtle traders. I've been studying them because I think the whole thing is fascinating. And so the turtle traders, with Richard Dennison's system, they went back and reanalyzed it, and it was wildly successful in the 70s when they were doing it. But had you applied that same system, and I think they did, the study was from like 2016 to 2020. So they didn't even, or not even, it didn't account for the recent crash. So like giving it the best benefit of the doubt, it was like barely break even. And is that because, Richard Dennison's system didn't work? Like, no, it worked for the season that he was trading in. And what you guys don't realize, even since Alfonso started doing the masterminds back in 2019, I think we launched your first one.
Yeah.
He's maybe even subconsciously, he is refining and adapting and improving the system to changing market conditions. And if he were to just take a snapshot of it today and put it into an indicator, it only gets worse from there. But when you're dealing with a human being with reason and intelligence and experience, then that system keeps adapting and improving, which is what, I mean, the turtle traders study, it was so fascinating to me. And that's one of the takeaways from that. You can't set it and forget it. You've got to constantly be learning, improving, and adapting.
Yeah. Yeah. And that's a great point. Cause that's, while my strategy hasn't changed, it's been improved every year, every quarter. And there's still things that I'm looking to improve on even more, like, being able to hold things, even trade less and hold things longer.
That's what I'm working on too.
But when I think about like, okay, part of me, because when I'm driving and stuff, that's the things I think about is like, okay, I have a strategy that always produces money every 20 trades. But how can I make more money? Well, the simplest way is just keep raising my risk unit per trade, which, every 20 trade samples. How do you make more than Alfonso? Well, next month, move it to 600 per trade, and then 700, and then 1,000. Right? I had to reduce it back to 500 just because I was doing that experiment. I had to drain my account I drained it purposely down to 26,000. So I didn't have enough buying power to risk 1,000 per trade. But that's one simple way to do it. But the other way is, is when I identify big voids, and a great example is like, is Dash, right? Where, I was able to capture what I wanted to make on the trade, while I was getting my vitamin B shot, but in my gut, like I was like, they're likely, from a probability standpoint, this is where even somebody who's been doing it for so long can get messed up. That's why I'm saying that the mental part of it, you need to continually work on that. So I'm like, I even said it when I first talked about it before the YouTube live came on. I said, there's this candle from 7.5, the high of 75, it should trade there easily. And you can see how easily it's done it today. I mean, since the entry of 71.04, this thing has traded $5 in half an hour blocks. This is each half an hour candle. So 1 hour, 2 hours, 3 hours. And it literally hasn't had a red candle since. It's just traded right back up to that high, which was over here on 7.5. So what I'm working on is taking that next level of my do what I'm supposed to do, when I'm supposed to do it, whether I want to or not, and be willing to stay in those trades longer, even if it means that some of them, which it will, because I don't know which ones will run 3 hours without ever stopping or pulling back. I mean, every candle opening at the low and closing at the high, I don't know which ones are going to do that. But knowing that over 20 trade sample, that only an extra 2 or 3 or 4 of them to do that, to dramatically amount of profit in each month. Does that make sense?
Mm-hmm. Yeah, totally. Hey, we're right at the top of the hour, and we don't have to wrap up here necessarily, but I know some people are going to start dropping off on YouTube, and I think actually your video just froze too, Alfonso, so hopefully you can still hear me. But if you're still in YouTube, we've had great engagement and attendance. Go ahead and smash that like button, and that helps us with algorithms and all that. Subscribe to the channel if you're not yet subscribed. We just passed 11,000, and we're on our way to 1 million. I want the is it gold or silver? I forget. I want the YouTube plaque. I want to hang it right back there. So help us get to that 100,000 1 million member mark. Then, as far as Alfonso is concerned, next week we're going to be doing a training. We're still finalizing the name, but I think we're going to call it Trader's Advantage. And the idea is, the advantage in 2022 has firmly shifted to the retail trader. there is little advantage to being a institutional trader right now, other than you're playing with other people's money. And so Alfonso is going to be teaching a 3-day series. I'm going to be there and co-hosting with him and laying out some of these principles that we have been sharing with you guys today. So I believe the registration is going to open later this afternoon, July 7th, in case you're watching the replay here. If you don't see an email or you need access to it, email us info@tradesmartu.com, or comment on this video, and we'll get that link to you. I'll try to come back and put the link to the registration in the description as well. There's no charge to attend that training. That's Alfonso's gift to you guys. Then after that, the subsequent week, we're going to be launching another mastermind with Alfonso. Like he said, he took a couple quarters off. He's back, and they were going to give first preference to those of you who are Alfonso alumni. And there's a bunch of new stuff coming out. It's going to be amazing. And we've got some special discounting for those of you that are alumni students. You'll be hearing from Rebecca on that if you are an Alfonso alumni. And then after all of the alumni have said yes or no, we'll open up whatever remaining seats are available to the general public. The masterminds get capped at 30 people. So we'll let you know what those numbers are as they roll out. But it's going to be amazing. It's actually going to be a 2-quarter experience this go around, not 1, but 2 quarters experience. And it's going to include the 5 minutes in a phone strategy. I've called it that. I don't know if Alfonso's on board yet, but the 5 minutes in the phone strategy that we started talking about today, and along with some earnings explosion trading strategies as well, the swing trading strategies. So we're excited to bring that to you guys. And if you have any questions, I'll be in here a little bit longer. I'll let Alfonso kind of wrap up if there's anything else he wants to share, but do hit the like button. I see our likes jumped up. They doubled since I mentioned that. So I will mention it one more time for those of you guys that are here live. And Fonzie, I'll go back to you. Anything that you want to wrap up with, or we can call it quits and show back up next week with the training that we're going to be doing.
Yeah, I think I'm pretty good. I mean, probably covered even more, a little bit more than I was thinking I was going to cover today. So yeah. So, yeah, I would come next week because I'll have a lot of chart examples. Then today was just a little bit more of just me talking, but there'll be a lot more chart examples, and I'll be able to walk you through a little bit more about the 30-minute trade in a little bit more detail. So you can kind of get an understanding of that. But yeah, so I mean, I look forward to next week. I got to get back to. It was funny. I had I actually had to restart the computer today because I'd been up here in a while, and I had to restart it. And I was looking around my desk, and I had some notes from March and stuff. So I was like, I got to get kind of back and being at the computer. But yeah, it's the mentorship that I have coming up is I think it's going to be the best one I've ever done. I actually needed that 6 months break just for a lot of reasons, but also, to make some improvements on the trading strategy, and then also to make it more focused on intraday. Now, I still will take non-day trades, shorter term non-day trades and stuff. But, I'm in some long stuff as well. Although my wife and I definitely exited out of a bunch of the longer stuff at the end of the year, just because I wasn't completely buying into the building back better agenda. And I felt that things weren't going to work out quite as planned. So I'm grateful that I did that, because I saved myself like 30% of my long-term stuff. But in any event, but I wanted to make this one a little bit more intraday focused, but intraday, but not like you need to be in a trading room, right? Or you need to be at your desk every morning at 8 o'clock or 8:30 Eastern Standard Time, and you have to have screens up, and you have to be in a room with 200 people and be on the 1 minute chart and sit there all day. I mean, if that's something that people want, those things are out there. But but I wanted to make it so that people can intraday trade and actually have a life, and probably make more money than all of those people that just sit in those day trading rooms, especially the real big ones and stuff. And so that's what next week's going to be about, is showing you the trades over and over and over again that I've taken, and starting to put together the puzzles of the pieces so that you can just do this consistently. And the beautiful thing is that once you learn, my system truthfully is simple. But as I always say, and I know Josh wrote this down, he could probably say, he's probably saying in his head, what's simple to do is simple not to do. Mm-hmm. So the key is to get people to the point where they not just understand the 30-minute intraday strategy, but then have the mindset to want to repeat it and become a master at it. And then once they have that, they're not that far off from just doing it on their own. Now, some people they like when they're learning something, they're like, I want to, like, one thing that we're going to have is we're going to have Friday morning trade review in the morning. Like, as the market's open, we're going to review the trades that I called during the week and traded. And those are valuable because people can start to see how probability comes together, but they can also then start to see the nuances of, like, well, why that 30-minute one and not that one, or what? Oh yeah, I can see how that one didn't quite meet our plan, but this one did. And the more, as I always tell, the more stringent that you can make your trading entries, your plan, the more successful that you will be. And the other thing that allows you to do, quite honestly, this is the other thing that I've been working on and thinking about, is how much you can risk per trade. So I find that when I look through now again, everyone makes mistakes, but when I look like through my past 60 trades, I can easily find out of the 60, 10% that really weren't my plan. It was like, I tilted my head. That one kind of looked good. I feared I was going to miss out, so I took the trade. And those are the ones that usually are the ones that don't work, or even if they do work, it's even worse if they do work, because then it kind of gives me this false sense of security that one random winner, is okay to deviate from the proven strategy. But
oops, lost Fonzie again. Is it on my end or his end? Can you guys still hear me? Oh, now you're back, Alfonso.
Yeah, you know what it is that I'm hearing thunder and lightning right out my window, and actually my computer just flicked for a second. So I think it's so, and I just saw that trade station just disconnected. So so there's like a thunder and lightning storm going on here in Brentwood. But anyway,
let's send some of that down to
next week.
Lewisburg.
We'll have plenty of time next week to talk more about it.
All right, that sounds like a good place to wrap up. Thank you guys for being here. I'll give you the last word, Alfonso, but I'll just sign off and say I'm so glad to have my friend Alfonso back from his sabbatical that he went on. I know he's fresh and better than ever. So we're excited to see what he's got to share with us next week. Get signed up for the free training next week. If you're an Alfonso alumni, meaning you've ever done a mentorship or a mastermind with him, be on the lookout for some communication from Rebecca to see if you're going to jump into this upcoming quarter. And then all of you guys be on the lookout for the new mastermind that's going to be launching here in just a couple of weeks. We're excited to do it. It's perfect timing. And heck, I may sit in on it because I want 5 minutes in a phone strategy in my life. I need less time in front of the screen.
Yeah, we'll see everybody then next week. Look forward to it.